Is it worth investing in Tilray stock? What are the main risks and what are the company's forecasts? Tilray is a Canadian pharmaceutical and cannabis company. The company also operates in Australia, New Zealand, Germany, Portugal, Latin America and the United States. About a year ago, the stock rose by several 100%. The thing is that the plants that the company is growing are still not legalized in many states, even for medical use. When Joe Biden became president, the expectations for the legalization were growing. Later in February, Joe Biden stated that his administration will pursue cannabis decriminalization, which is not enough for the company. The bill requires at least 60 votes to pass, and the bill still lacks support among both Democrats and Republicans. So the process dragged on and the stock price went down again. According to the forecasts, the company's revenue will keep growing in double digits in the next few years. And apparently these forecasts don't take into account possible legalization. And recently Tilray CEO explained why the company isn't waiting for US legalization lottery ticket. And the last financial results the company published were higher than market expectations. Revenue increased by 20% year over year, adjusted EBITDA increased 8% year over year, and net income was $6 million, compared to a year earlier loss of $89 million. The pandemic led to an increase in demand for cannabis, which also means the demand may decrease when it's over. Tilray's merger with Aphria in the last year seemed to have positive results. The company now is definitely a global cannabis leader. If more countries legalize it, the company has more room to improve. At the same time, the main issue is approval at the federal level in the United States. It can boost the company's revenue growth, but seems like it's not going to happen in the near future. Well, I don't have a crystal ball, but if Nancy Pelosi buys this stock, it's gonna be a good sign. The company's current market capitalization is $2.5 billion. The company's assets cost less, so the price is fine. Price to sales ratio is 4.8, which is also fine. The company doesn't have large debts. The only problem here is that the company didn't have profitable 4 quarters in a row, so we don't have return on equity, return on assets, price to earnings ratio. Well, they are negative. But considering the company's latest financial results, they are slowly improving. And this despite the fact that the industry at the federal level has not yet been legalized. It could fundamentally change the situation. Conclusion. Well, it does make sense to invest in this, but there are problems. And even if you believe that sooner or later it will be legalized at the federal level, the process will probably take much more time than expected. Until then, the company may announce multiple public offerings, which is not really good for the investors. As a long-term investment, yes, it seems interesting.